After numerous reports earlier this year suggested that auto dealers and lenders were writing too many loans to those with spotty credit records, a new report now paints a different picture. In fact, lenders hit the brakes on the number of subprime auto loans that they issued in the first quarter, sending them to a near 10-year low. LeBeau has more on the changing dynamics of who is buying a car and a truck right now.
With auto sales starting to slow down, there's a greater focus on who's buying cars and trucks right now, and can they afford the loans they're taking out. Over the last 2 years, more borrowers with the poorest credit records have been unable to make payments, and they've been defaulting on their loans. Perhaps that's why lenders have hit the brakes on subprime loans. They plunged in the first quarter, while lenders did more business with those who have the best credit ratings.
We've been hearing just here and there over the last year and a half, various lenders coming out and saying that they were really going to restrict subprime. And as those lenders came out and made those statements, it seemed to trickle down into other lenders in the industry, and others seemed to follow suit.
Tighter credit in the showrooms comes as automakers are adjusting their production schedules and the supply of vehicles rolling into dealerships. While inventory levels are slightly higher than normal, this is an industry showing greater discipline than it has in the past, and that's changing how aggressive dealers can be when it comes to writing loans, especially since 25% of all auto loans are to subprime borrowers. But make no mistake, dealers are still trying to come up with a payment the customer can afford. Increasingly, that means extending how long it takes to repay the loan so the monthly payment is as low as possible.
On both new and used cars, we see the most common loan term is 72 months, but the percentage of loans, both new and used, that are financed between 73 and 84 months continues to grow.
Right now, the average monthly payment for a new vehicle is $508, according to Experian. For used vehicles, it's $363. Both are slightly lower than what subprime borrowers pay each month. But for everyone, the monthly payment keeps moving higher because the cost of cars and trucks, new and used, continue to rise. LeBeau, Nightly Business Report, Chicago.